Hello, I'm Richard Murphy, and I'm making a series of videos on why we should tax the wealthy, the multi-millionaires, more, and the reason, by the way, is to tackle inequality, and how we can achieve that goal. I'm talking about the practical steps that can be taken now by a government without having to go through the process of introducing a wealth tax, which I think is a bit of a red herring when it comes to solving this problem because it would take so long to deliver. So what can we do? I've already discussed a number of such ideas and they are all linked below this video. But let's talk about another idea that should be tackled, and that is to equalize the tax rates on income tax and capital gains tax. Now, what is a capital gain? We all know what income is. What is a capital gain? A capital gain is something that arises when a person sells an asset that they own and they make a profit as a result. What is an asset? It could be shares. It could be a rental property. It could be a piece of land. It could be a valuable piece of art. It could be your car if it's a collector's car, although there are special rules to cover some of those things. It can be your stamp collection in some cases. Again, there are rules that normally exempt most of those, but in some cases maybe not. It can be Bitcoin, by the way. Now, what I'm talking about is taxing capital gains then. Now, we have a capital gains tax in the UK. These things are subject to tax, subject to an incredibly generous annual additional allowance, personal allowance for each person, which is equivalent to that, near enough, available in the income tax system for offset against earnings from work and investment income. The first thing to question when we talk about equalising the income tax rate with the capital gains tax rate is, why do those who get capital gains, who make capital gains, why are they worth giving 2 annual tax allowances to, when a person who only makes their income from work gets 1 annual tax-free allowance? I personally don't buy this. I get the reason why we need to exempt £2,000 or £3,000 a year from capital gains tax charge to avoid too many people having to submit tax returns to declare small capital gains. So I get the reason for administrative purposes at HM Revenue and Customs why we want to exempt small capital gains from charge. I buy that. Anything above that seems to me to be a simple, straightforward bias to those who can divert their income away from those things subject to income tax towards those that are subject to capital gains tax. And I will be honest with you, that's not desperately difficult if you so want to organise your life to achieve that goal. That might make you particularly sad, by the way, but some people want to do it, and I don't think they should be given the chance. The second thing that I really object to is the fact that the capital gains tax rate is very low. For people who basically pay the standard rate of income tax, 20%, the capital gains tax rate is 10%. The people who pay the higher rates of income tax, 40 and 45%, pay capital gains at 20%, unless we are talking about capital gains on rental properties when the rate is 28%. Now, that's not a complete guide to capital gains tax. Don't rely on that as an absolute tax guide. You obviously need more detailed advice if you're completing your tax return. The point I'm making is this. It's very obvious that those rates, which I've summarised simply, are very much lower than the equivalent rates of tax which are subject to income tax. Why should capital gains be charged at so much lower a rate than income tax? Well, the argument is, oh, but capital gains arise over time and you only make them sporadically. Therefore, it's not fair to charge them at the same rate as income tax because they might have otherwise arisen in a year when you made a lower rate of income as a person. I'm afraid to say this is complete nonsense. Most capital gains arise for people who are higher rate taxpayers. Why? Because the wealthy make capital gains and by and large the wealthy have the highest rates of income. There is a marked correlation between the two. Not perfect, but a marked correlation. So why should we then give this lower rate of tax, which is inevitably biased towards the wealthy, that they get away with a reduced tax rate? I simply can't answer that question because, frankly, once £1 arrives in a bank account, whether it is from earned income or investment income or capital gain, it's £1. Why should one of those pounds have been taxed less on the way in than another pound? I don't know. I've already discussed why I think investment income should be taxed at the same, near enough rate, as far as we can make it, as earnings from work. So why should capital gains be lower as well? There is no equitable, just or reasonable answer to that question. Simple fact is, we need to equalise the rates of tax on income and capital gains. We treat capital gains as the top part of income. We reduce the annual allowance. Oh, and by the way, I have in another video suggested that we should have an investment income surcharge on income from investment sources like savings and rents and so on, because otherwise those escape national insurance, and I don't see why, again, we should have a bias so that income from work is taxed more highly through national insurance than is income from investments. Well, I don't think capital gain should get that favour either. So let's add in the final twist. Not only do I think that capital gains should be taxed at the same rate as income as if they were income, because that is exactly in economic terms what they are, but I also think they should be subject to an investment income surcharge so that we have equality of tax rates within the tax system, and then we will begin to get the essential level playing field that is a part of achieving social justice in the UK, the necessary condition for the tackling of the inequality which is currently undermining the solidarity that is essential if we as a community, as a country, are going to be able to deliver the types of change in our society that are going to be demanded by all the crises that we're going to face over years to come as a result of climate change, COVID, migration, and everything else which is going to challenge us. This is something we have to do now. We can equalise the rates on income tax and capital gains tax, so let's get on and do it. Thanks for watching. If you're interested in what I've been saying in this video, please subscribe. There is a button below the viewing screen. If you're interested in what I have to say on Twitter, I'm at Richard J. Murphy on that medium. If you want to look at my blog, that's taxresearch.org.uk, and we have a Facebook page as well, Richard J. Murphy. So one of those things will get you more information on what this video series is about, and I hope I'll see you again soon.